I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. We're the Mortgage Brothers team, and today is May 10th.
And today we're going to talk about mortgage rate updates and what those payments are, what the median home sales price of Greater Phoenix area is, how many active listings are there, how many pending contracts are there, what percentage of home buyers are making offers above list price, are the foreclosures on the rise or are they dropping, and what cities in Phoenix are buyers markets versus sellers markets. So let's get into it.
Okay, so a lot of you are past customers, our clients, and you're watching this video here on YouTube. And if you're new, if you don't know of the Mortgage Brothers here, we are mortgage brokers here in Phoenix. This is our area. We were born and raised here. This is where we do our work. And again, this is our YouTube channel. So if you like what we're doing here, be sure to subscribe, comment, and like. Give us a call if you have any loan scenarios. We'll be happy to help. And remember, this is not financial advice. This is for informational purposes only. We're going to just talk about the mortgages, the mortgage update real quick. The 10-year bond, the 10-year yield is what most seasoned investors or traders are looking at. The banks are looking at this. It moves the mortgage rates. It is the number one cause or influence over the mortgage rates. And it's kind of stuck in this channel. Back in November, it hit a high, and it's been coming down, kind of bouncing up and down, and it's just kind of stuck right here. This is the 10-year yield, and that's exactly what the 30-year fix has been doing.
Yeah, and as we said before, not only do investors look at it, but institutional investors look at it, and not only that, but like countries look at this 10-year. Mm-hmm. So the 10-year is a very critical metric that is used, and you can see here's that channel. It's going to bump along like a pinball machine a little bit, but we do think that it's going to continue in this channel.
Yeah, and it will. And it's stuck. And right now, it's because there's a lot of uncertainty. What will the Fed do? Where's inflation going? There's a debt ceiling that the House and Senate are going to be arguing over here real soon, and all of these are uncertainties in the market. And depending on how that goes, bank failures, all these things will play a role in where this 10-year is going to go. Again, we do believe that rates will, in the long term, over the next 12 to 24 months, follow down or head down.
Yep, and I'll leave you with this too. As people buy these bonds, these countries, these institutional investors, they drive the price down. As people don't buy these, the price goes up. So there's a lot in what makes that bond move.
So the Mortgage News Daily puts out a survey to see where interest rates are at, what's been quoted. Right now, we see the 30-year fix that are being quoted about 6.68%. The 15-year fix we see at 6%.
The 30-year FHA is 6.29, and the 30-year VA 6.28.
And again, this is a survey of all the mortgage lenders out there quoting. There are a lot of Tom and I were mortgage brokers. Our rates, we're really proud of our rates being a lot lower than what most surveys are going to show. Here's an example of, we're going to show you, this is the Phoenix. These are the 13 most populous cities in the Greater Phoenix area. And this is based off of an interest rate of 6.375. That's what an excellent credit score borrower would get. But this sheet here is just showing the median home price in each of these cities. And this is just, we're giving the viewer an idea of what those payments would look like today if you're putting 25% down.
Yeah,
just as across the board.
Yeah, and in those markets you have different price points. So it's kind of going out car shopping. We're going to give you some basic monthly payment targets based upon the market and the price that is being yielded for that median home price.
Yeah. So if Phoenix would be a almost $2,200 for a monthly payment. Scottsdale home, if you're buying that median home price at $813, you're going to be paying about $4,300. But again, that's 20% down, 25% down, just kind of average taxes. Let's see here. We have Peoria at about $490 for the median homes price. That payment's about $2,600. And let's look at Santan Valley. We have a lot of people have been talking about Santan Valley. It's at $395 for that median home price with about $2,100.
And these are for 30-year loans, but remember, we think rates will come down. So these will not be the payments you'll have for the next 30 years. If you do not refi or you do not sell, then the answer would be yes, this is your payment. But in all likelihood, you'll be doing a refi at some point, and you may be selling. People don't stay in their homes for 30 years typically.
Right. And so the Greater Phoenix area, if you take all the cities in and really Maricopa County, the median home price right now is $430,000. It was in May of 2022, so just 1 year ago, that peak at $480,000. But again, we bounced off that lows in January, so the number's pretty strong. And right now, the active listings are 11,700.
So if you're buying a home and you call your realtor and you say, "Hey, realtor, how many listings are there, homes that we can buy from like $1 to 20 million?" We're saying that there's about a little over 11,500 homes.
Yeah. So, and it's come down. It was almost 20,000 in the summer or late fall or early fall. And it's come down, and really we're kind of back to that May, or what was about 2019 levels. Again, it's still low. And historically, in a healthy market, it really should be, with our population now, it should be about 30,000 listings.
Yeah, what a difference.
Yeah, right now there's about 9,400 listings under contract. Again, as you can kind of see, this goes back to 2016. And of course, seasonally, you see the peaks are really in the springtime. And then the low points really are at the end of the year. Into December and January, but we're really under contract. We still are, pretty average. And that's why there's only 2.2 months of supply. And what that means is, let's just say, and again, this is not realistic, but if no new listings were to come on the market based off of the number of homes that are going under contract, it would take about 2.2 months.
Right. Yeah. So we have what, 9,400 homes?
Yeah, but some of those contracts aren't going to be 30 days. Some of them are going to be 60 days. And you know what I mean? So I was trying to do that math in my head. It's not,
Right. It doesn't work out perfectly.
It doesn't work out perfect.
But the point is there is a very low supply of homes out there.
Yeah. And how many buyers are putting in offers above list price? This is something that I've been looking at a lot. I mean, you and I have been talking about we're hearing a lot of buyers out there putting in offers above list price, and certainly it is at almost 20% right now.
Yeah,
that is higher. Now, if you go back to the COVID era of 2020 to 2021, it was much higher. It was like 50% of all offers were higher than a list price. But today's number, we're at 20%. Above list price, 20% of offers are above list price. That's higher than 2014, 15, 16, 17, 18, 19.
Yeah. And that's just a supply demand issue. There is more demand than there is supply, or that scale's, tipped. Now, what this doesn't talk about is, I almost guarantee you that the homes that are going above are lower priced homes.
Yeah.
Maybe not the $2 and the $3 and the $5 million homes, but those in the $3, the $4, the $5, the $600,000 homes, you're going to see a higher percentage of those going over asking.
Right. Right now, 44% of transactions have seller concessions. So that is a seller concession is when a seller on the contract gives the buyer money to pay for their closing costs and their escrow account for taxes and insurance. And that's average concession right now is about $5,700. But the fact that I think this is a good metric to look at, because it was peaking at about 50% of transactions. So if there's more sellers giving seller concessions, that means sellers are a little bit more desperate. But that's been coming down since January.
Yeah. And it's still close to half. Just got a contract in today. And what was that seller concession?
It was at $5,000.
$5,000. Mm-hmm. So right on the money.
And it looks like really going back to 2015 through 2019 into 2020, the average seller concessions or contracts with seller concessions is about 40 to maybe 38%. So we're getting close to that. The average days on the market right now are close to about 78 days right now. And that's really is, you could say, an average number. Historically, this goes all the way back to 2001. So it is something to be, it's average. Okay. And a lot of people ask us, what about foreclosures? What are foreclosures rising? And, last year when prices were going down in 2022 from May, people were really concerned that we were going to see a lot of foreclosures. Well, we didn't see any foreclosures. I mean, really, there was no blip at all. You can see this chart goes all the way back to 2002, and you can see the crisis of 2008 to 2010, how many homes were going into foreclosure. And the trustee deeds are what records that. These are recorded documents that say this home was lost by the buyer.
Right.
And or the owner. And anyway, it's so low, it's hardly visible on this chart.
And one of the big reasons for that is back in the Great Recession, 2008, 9, 10, 11, there were just too many homes. People could not consume enough. Today, even if someone is having trouble making a mortgage payment, that house is hardly hitting the market.
Yeah.
A neighbor's finding out about it, a relative's finding out about it, and they are buying it.
Yeah, and in the homes that were back in 2007 and in 2008, 9, those were interest rates. Those homeowners had interest rates at about 6.5%, 7%. Today, most of the homeowners out there have interest rates at 3% because they all refied. They purchased or they refied back a year and a half ago or more. This is from the Cronford report. This is showing two lines, the blue and red line. The blue line is the supply index. And the supply, and it's pretty straightforward. And I'm going to explain it this way. The supply index is if it's lower than the demand index, that means that there's fewer sellers than buyers, or fewer seller demand versus buyer demand. And right now, 100 is a normal market. Both are below 100. It just means that there's few buyers and few sellers, but there are more buyers. And the Cronford report has this really neat heat map. And what you're looking at, and we showed this last month as well in April, and there is more red on this map. And with the red cities here, what that means is that it's heating up and becoming more and more of a seller's market in those areas. That means the red stands for between 100 and 200. That means that's for every one listing, there's at least one pending contract. So let's just say there's 100 listings out there. There's going to be more than 100 pending contracts in those cities.
And I like it how technical they define those heat colors. Look at that. You've got hot and hotter and insane. And you have frantic and unbelievable. And then look at 1,000 plus.
So this is considered a frenzy in that red. There's a lot of buyers out there chasing the sellers. And this is a neat breakdown, really showing the 17 largest cities in the greater Phoenix area and which cities are a seller's market or in a seller's market and which ones are in a buyer's market. The green are in seller's market. And we had a realtor recently ask us, you can see down here, Queen Creek, it's at a 101, a rating. That's the Cronford Market Index. So anything above 100 is a seller's market. But technically, it's pretty balanced. Mm-hmm. I mean, if you're between that 90 and 110, it's pretty balanced. But so Queen Creek is technically now above 100, so that is now into the seller's market. Even last week, it was in a buyer's market. Maricopa and Buckeye are the only two cities that are really in that buyer's market. Yeah,
hence why there are 19 point whatever number it was of over asking price.
Yeah.
Contracts, because we are in a seller's market. It's tough to think with these interest rates, but there just isn't enough supply.
So if you have any questions for us about your home, your mortgage, and you just want us to, give you our thoughts and opinions, be sure to email us, call us, put it in the comments. We'll be happy to help.
All right. We're here to help. Thanks, folks.
Take care, everybody.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.